The grass is always greener on the other side. I found that to be true in a lot of cases. When, for example, you're working for a company and earning a salary, you dream about what life would be if you were your own boss, if you could choose when to wake up and when to work. How amazing does that sound? You'd be able to wake up whenever you want, like I said. You'd be able to take days off without having to take permission, and also have flexible working hours. If on the other side, you're a freelancer, you're dreaming of a regular income as well as fixed working hours and retirement benefits, to say the least, as well as group health insurance. This is Big Decisions on NDTV Profit, and I'm Alex Matthew. On today's episode, I'm reaching out to all of the freelancers out there. If you are a freelancer, we're going to talk about what the challenges are that you face and how do you overcome them, as well as the ways that you should manage your money effectively. But before we get to that, let's talk about some of the misconceptions out there about managing money as a freelancer.
As a salaried employee, you might think that the life of a freelancer is all about flexible work hours, endless coffee, and cute co-working places. But it's also a constant battle with, so what have you decided about the future? Freelancing comes with its fair share of misconceptions. Some people think we can't get a loan, some think we can never make a retirement corpus, and well, some just think we can never fully manage our expenses on our own. Most people also believe that we can't do any regular investments like SIPs just because we don't have a steady income, nor can we have any long-term goals. Another one that I've heard is that we don't need insurance, be it life or health. But everyone needs a safety net, right? The most common one I've heard though is freelancing to theek hai, but what are you really planning to do? Are you planning on getting a job or starting your own business? But the thing is, freelancing doesn't need to be that risky, not if you manage your expenses properly. And that is exactly what we're going to be talking about on this episode of Big Decisions.
My guest today is Harshvardhan Roongta, co-founder of Roongta Securities. Harsh, thanks as always for taking the time.
It's always my pleasure, Alex, to be here.
And it's great to have you back on this new avatar of Big Decisions. Let's talk about freelancers. And I must admit that in the mainstream media, we often, shall we say, skirt this group of individuals in favor of the salaried individual. Is it very different, the managing of money, if you're a freelancer?
Yes, in fact, as you rightly said at the beginning, that if you're a salaried employee, there are certain benefits that you get. There are some compromises you have to make. Now, there are going to be pros and cons of each type of profession that you're pursuing. If you're working with a corporate, you have certain comforts and at the same time certain challenges. If you're a professional freelancer that you're on your own, then you're not going to get certain flexibilities that you have, or are certain privileges of being into a corporate sector. Like, for instance, you have a regular income coming in the form of a salary if you're salaried. Now, that is a great advantage in terms of planning your finances, right? You have visibility of your cash flows, so you know, and you can commit yourself to certain, say an SIP, as simple as that. Whereas a freelancer would have certain challenges to commit a maximum amount towards SIP. So what we would necessarily, talk to a freelancer or a professional in that context would be that you commit the smallest amount, okay, as an SIP, so that there is a flow that you know that on an auto mode, certain amount will get deducted from your bank account every month. Over and above that, if you land up saving something in a particular month, then you do a lump sum investment. So yes, there are going to be pros and cons in each type.
But let's talk about some of the challenges that you might have discussed with people that have come to you for advice. Is the irregularity of income the biggest challenge to overcome?
Yes, in fact, as I said, everything is dependent upon how regular you're going to get your cash flows. So all planning essentially would be dependent on this one single factor. So while for a salaried, we know there is visibility of exact amount of money that is going to come in. So you can plan many things accordingly. Whereas for professionals and freelancers, there is going to be, phases where you have no income. You've rendered your services, but the bills are going to be paid after a couple of months. Okay, so that could be a kind of a situation. But your expenses on the other side are fixed.
Yes.
Right. So your income could come in, in lump sum sometime, only in a couple of months in a year. But your expenses are going to be incurred every month.
So then from that perspective, is there any way to get around that? The obvious way would be to have a certain amount of I mean, I loosely calling it a contingency fund or an emergency fund, but could it be a daily needs fund, if you can call it that?
Yes. So in fact, what we do for freelancers, I'll tell you. So there are two parts to this. The first one being that 6 months worth of your expenses, the mandatory expenses, which are your household day-to-day living expenses, your food, clothing, shelter, in fact. So 6 months worth of that, you keep it aside in a liquid fund.
Sure.
So that's essentially only to take care of your living needs, as you rightly mentioned. It's not a contingency fund, it's your expenses fund.
Okay.
Okay, so this is just an employer kind of a situation that you kept it aside, saying that every month, whenever I need money, I will pull out of this particular fund. Now there's another set of expenses which are annual in nature, okay, which is not going to come every month, but these are annual commitments that you have.
Right.
Now these are also mandatory expenses. Okay, so our suggestion on that count is, like, say for example, your children's fees.
Sure.
The schools may charge you on a quarterly basis or a half-yearly basis.
But
right?
that amount is for the full year anyway.
That's for the full year.
Yeah.
So what we recommend in cases such as a school fees or your housing society charges, your insurance premiums that you have, you rather make advance payments for them when you have the money with you.
Right.
Okay, so say for example, you have to pay your children's school fees. So what you do is, though the school may ask you to pay quarterly or half-yearly, you can go up to the school and say, look, I want to deposit that annual fee at one shot itself. At that time when you have the money in your hand. Okay, what this helps you do is that because your schooling cannot stop, right?
Yeah.
Irrespective of whether your client has paid you or not,
yeah,
you will still need to pay your fee. So at least those expenses you ensure that you've paid off in lump sum, so that you're not worried about for the next whole year. Look at it from a life insurance or a health insurance perspective.
I was going to come to that, but we'll talk about life insurance and health insurance a little down the line. What I want to ask is, at the start, assuming that somebody's listening, watching this, and they haven't done any of this, and they want to set their finances in order, Harsh, what do they prioritize? Do they look at these expenses first and foremost, because that's something that's not going away, and then after that, once that is put into place, because it's going to take some time to put those 6 months together, only then do you look at investments?
Yes, of course. I mean, so, as much as we say that you should save for your retirement well in advance, etc., but you'll have to still wait for the right time when you can start investing for it.
Right.
Now, in cases of freelancers and professionals, as I said, if your priorities are going to be different. As I said, first make a list of all those mandatory expenses which you have to incur in a year.
Right.
And there's no choice to it. So it's school fees, housing society charges, your electricity charges for that matter, your utility bills for that matter.
Even your rent, I would think.
Your rents and your insurance premiums. Okay, so these are expenses, whether or not you're earning, you will have to pay for the year. So you make first those mandatory expenses that you have, you make a list of them.
Right.
Now what you do is, then of course there's 6 months worth of your living expenses you need to keep provisions for. So these two things you have it in your hand right now.
Yes.
Now as and when you get paid for your services, you allocate towards them.
Okay.
Okay. What you could do, as I said, is at first keep aside for 6 months, because if you're not going to be having some work or freelancing job work, if you don't have that for the next 2 or 3 months, doesn't mean that you're not going to have your food in that period. It doesn't mean that you don't have to pay electricity bills.
Very true.
Right? So what you do is, first you ensure that you have enough buffer for your 6 months cash flows. Okay? Thereafter, if you're left with something surplus, you will think of long-term investments.
But then, so 2 questions here. Why liquid fund? Why not just leaving it in your bank account, or have your flexi fixed deposit in terms of your sweep in, sweep out facility? And the second point is, what happens to the contingency fund? Because I would think that these individuals would need to have a larger contingency fund, or is that a misconception as well?
No, so contingency fund is a part of the living expenses that we're talking about in this case.
Okay, it covers that.
Yeah, in this particular case.
Sure.
Why? Because the flow of income is not going to be assured unlike a salary. So what do you mean by contingency fund? Is such a situation.
When you don't have a job. Right, okay.
So contingency fund is equivalent to this.
Right.
So as you're rightly kind of pointing out, that what do you do? So first is, of course, you need to make sure that your present is pleasant as well.
Right.
Right. We can't be in a situation where your next month's expenses are, you don't have visibility of that, and you're talking about retiring after 10, 20, 30 years.
Yeah.
It's not going to logically make sense to anybody.
But why liquid fund?
Okay, so either ways, given the sweep in, sweep out facility, if you are comfortable with that, you can most certainly continue with that also. There is no problem. Just a small, administrative issue. if there's a sweep in, sweep out account, I mean, there is a TDS implication.
Sure.
Okay, because it gets converted into a fixed deposit. Then every time there is going to be a small, withdrawal. So there is going to be some kind of TDS and those compliance issues.
Whereas liquid mutual funds, there is deferment of tax. Whenever you pull money out, you then pay taxes on.
So that's simpler to calculate. You don't have to. It's just simply a long-term, short-term capital gains tax statement that you need. Where vis-a-vis, when you compare to this will be more like an interest payment to you.
All right. Now, the next point is about your insurance, because you mentioned that, and this is, I know that you've said this on conversations that we've had in the past, that you need to have a few things in place before you look at investments, right? And your safety net is the most important thing. A lot of people, be they employed by someone or working for themselves, they look at insurance and think, why do I need this? But why would you say that freelancers absolutely need insurance, and how much do they need?
So in fact, Alex, all individuals, whether employed or unemployed, or for that matter, freelancing professionals, I mean, everybody needs insurance. Okay, I would say, I put it like this, insurance is the best man-made product in this world. I mean, it is the first step of financial planning. And I go ahead and say to this extent as well, that in case you have to delay your investments,
yes,
you delay your investments if required, but do not delay insurance. I mean, that's how critical it is as a part of your own financial good well-being.
But so health is non-negotiable. Term, I would think, is negotiable depending on whether you have financial dependence.
Absolutely. So health insurance is something that you are just ensuring that you are accessing good medical treatment in case you fall ill. Even if you're maintaining a very good lifestyle and you may think that you're the fittest and you consuming the best of food, you're taking full care of yourself, accidents happen, there's so much of chemicals that are going into our body, in terms of pesticides and all those things.
And you never know.
I mean, I've seen the healthiest of people suffering from cancer, all you know.
Yes.
I mean, healthiest in that sense, maintaining good lifestyle, maintaining good diet, working out, etc. But, if something like a cancer strikes you, what do you do? So you just have to ensure that you have access to good medical treatment. And given the cost of medical treatment these days, I mean, a treatment of during COVID, an average hospitalization cost was 1.5 lakhs. That was average, the national average that I'm talking about. And claims in that time also were paid only to the extent of 90,000 rupees. So there was still some money that you had to pay. So imagine some claims that have gone to even 10 lakhs and above. I have seen cases where claims have gone to even 50 lakhs for COVID kind of a treatment. Right. So how do you access good medical treatment for yourself? So whether you're working, not working, unemployed, whether you're a freelancer, illnesses don't strike you just because you have money.
So, and how much do you need as health insurance?
So, well, if you're in metros, because the cost of treatment is going to be higher there, given the current situation, being very conservative, just because I have to give you the minimum amount, I would say that do not have insurance less than 10 lakhs.
And if you are part of a family, then you should look at top-ups as well.
Yes. So, in fact, if you're in middle to affluent family, I mean, make sure that you have a combination of a base policy and a super top-up, going up to say a 50 lakh or a 1 crore cover.
Wow. Okay, that much.
And that is possible with a very nominal premium because of this super top-up concept. Okay, so if you're a middle income or an affluent family, just ensure that you buy an insurance in combination with a base and super top-up to the extent of at least 50 lakhs or 1 crore. Okay, nowadays we have even options of global cover being included. You can go for treatment overseas.
Sure. So we've covered quite a bit of the cost side of it. I want to talk about the investments and the savings for goals, and also a lot of people that tend to want to create a business. I know of a lot of professionals that say that that's the next logical step. So I'd like to talk to you about the pros and the cons, and also the pitfalls to avoid about that. But we have to slip into a very quick break. Before that, we'll be back on the other side with a lot more. Do stay tuned. Welcome back. We're speaking about freelancers and how they should manage their money, or you should manage your money if you're a freelancer yourself. Harshvardhan Roongta is in conversation with us on Big Decisions. Harsh, we've spoken about the cost side of things, but when it comes to the investment side of things, I think a lot of people face this challenge. If they're spending so much time and effort and money, setting aside that amount of money that's going to be taking care of their daily expenses, they're focused on the very near term. How do they save for their, 20 years down the line? You're talking about post-retirement. Do freelancers ever retire?
So, well, they would not intend to retire, of course,
Yeah.
because the purpose of doing freelancing is that you're offering certain specialized services,
Yes.
which is a skill set,
Yeah.
essentially. And that hopefully will not be outdated over a period of time, and they would continue to work as long as they can. So, this is a very interesting element of saving for long term. Why? Because you're so engrossed with managing your cash flows in the present that you lose sight of what you need after, say, probably 10, 20 years from now. But you have to somewhere ask yourself, shake yourself up and say, look, one day, if I'm going to struggle for my cash flows in the present, I don't want to be doing that 10 or 20 years down the line, right? Because you never know if your skill sets are still relevant.
Yeah.
And you may not probably at that point in time be able to offer freelancing services. So what happens at that point in time? And you don't have an organized pension or a EPF or an NPS for that matter to take care of you. So what do you do? So there's one small side that you'll have to, at the corner of your eye, just keep, be mindful of the fact that, look, if I am able to set aside a small sum of money, okay, it need not be a huge fancy number. It could be as less as even say 1,000 rupees. Just giving an example, need not literally mean 100. That does not mean 1,000 rupees at all. It could be as much as you can set aside comfortably. Set it aside, assuming that you don't have that money, access to that money at all. As if your client has paid you less to that extent. It could be 10% of that income that you're generating.
Yeah.
Set that 10% or 20% aside.
So when you're saying it could be a percentage, what according to you is the ideal? And of course, you have to strive to it. May not be possible, but in your opinion, what is the ideal amount to set?
It's very difficult to generalize because it depends entirely on what stage of freelancing
and how
you're
much
in.
you're getting, yes.
So if it's, so let's assume.
But you're starting out.
Yeah, so let's assume that extreme, that you're just starting out, you're trying to build yourself as a professional or a freelancer. Try and set aside 10%.
Sure.
Even if it means 1,000 rupees.
Yeah.
Okay, but just form that habit, create a corpus, create a fund rather, to say that, look, I'm setting this money aside for a time, say 20 years from now.
Yeah.
It's as good as TDS, say for example, a client is deducted
Tax
TDS.
deducted as source.
Yeah, so you feel that, there's another 10% deducted as a retirement fund for you. If you were in employment, even then there was a deduction from your salary, right? So why don't you behave as if you're employed and doing this for your own self? So put a 10% aside, and as and when your income keeps going up, that 10% will obviously incrementally go up. Alternatively, what you do is that whenever you have some surplus left at some point in time, then pocket lock, stock and barrel.
So lump sum investments whenever you get the chance.
I think there's no other way, because if you have irregularity of income or no visibility of a smooth regular income every month, then as and when you get money, you'll have to park it aside.
Right.
Now, it does not mean that you need to put a lump sum. If you have few lakhs coming in, you don't need to put that entirely into equity.
Sure.
At one shot. If you're not comfortable with investing lump sum, you could do an STP, no? So you invest it into a debt fund.
A systematic transfer
plan.
So you put it in a liquid fund, which you're doing already for your daily expenses.
Correct.
You can maybe have another liquid fund, and from that fund you can do a systematic transfer plan.
Correct.
To a couple of, or 2 or 3.
Exactly. So
funds.
in case you're not comfortable investing lump sum in equities.
Sure.
So you have received a lump sum which you don't need in the next 2-3 months.
Yeah.
So why not put it aside for something that you may need after 10-20 years from now?
Okay. So what you're essentially saying is that SIPs may not work, obviously, because you don't know when you're getting money.
So one thing you could do over here is, for the SIP part of it, that you commit the lowest amount that you believe that you will have in any case.
Right.
So suppose your total potential to invest every month is 20,000 rupees. Say the best case scenario. Commitment you can also take for 2,000 rupees. No?
Yeah.
So you can say at 2,000 rupees will go
whatever you're
whether
comfortable with.
Whatever you're comfortable with. 1,000, 2,000, 5,000, whatever you're comfortable with. So let there always be one amount which is auto debited. Okay, so that has to continue. Now, as and when you receive a lump sum and you don't need it in the next 2-3 months, then you can just put it as a lump sum in the same fund. Plus that SIP continues. Why am I saying that minimum amount at least you should commit? Because unless you commit, irrespective of the amount, you will not have it in the system, in your scheme of things to do.
In your experience, is it tougher to get a loan as a freelancer?
See, if you have some kind of income, it need not be every month, but you have regularity or some kind of a pattern in your income for the last 3 years. Okay, not as just starting off, but if you have certain kind of a history of 3 years of some pattern of income, then it's not very difficult to get a loan.
And if you, so for example, one of the biggest loans that you would take is a home loan. And there are risks associated with that. Of course, you've said this before, but I will reiterate it. You should ideally have term insurance if you're buying a house and if you have dependents. But having said that, are there any pitfalls that you should be aware of before you go and buy a house as a freelancer?
So see, house is a very long-term commitment.
Yes.
Okay, you don't want a situation that you've paid 25 or 50% of it, so some amount of it you have to pay down payment, which is approximately 20%.
Right.
So that much you're already committed to the property. Thereafter, you're also committing a fixed payout every month in the form of an EMI, and you don't know how much income you're going to generate. If you're in that stage, there are many freelancers
who are doing really well,
who are doing very well for themselves. And then I'm not talking about those people. I don't think we are addressing to those people in that any case. So we're talking about people who are in that zone where they're just in the process of setting themselves up with irregular cash flows. So while house is a very big commitment to make at that point in time, you're just putting undue pressure on yourself at this juncture to say that, look, my payments are going to be fixed. What if I don't pay? Then what happens?
So wait till you have a little bit of stability, you have larger amount of income coming in, and then you can take that call and save till that point.
Absolutely.
So instead of 25% down payment, you could well do 40% off.
So, and because house is something that you can also take on rent, right?
Sure.
It's not that if you don't have a house, you have nothing to, nowhere to stay. So then it does not fall into the mandatory category at this juncture.
So then the last question, and that has to do with those individuals that are looking to take the plunge and set up their own business. In a lot of cases, they're doing things that are allied and that would lend themselves to setting up a business. Is there a distinct advantage to setting up a business?
So setting up a business or doing freelancing is more or less in the same category. Just that when you're setting up a business, it could, see, freelancing would essentially mean giving your services.
Sure.
Okay, business could be, you could put up something which requires a lot of capital to be infused into in the form of an infrastructure that you need to set up. The kind of people that you will need to run the business. So that's a different equation in that context. Okay, but
you're working with more people.
Correct. So freelancing would be your rendering your own personal services for some, just doing something which is only to do with you. You don't have a large infrastructure. You could do it from home.
Sure.
So, but when you're doing a business, then of course there is going to be some goods or services that you're going to produce in that sense to offer it to your clients. So, which will entail an infrastructure. So, all those people who've been into corporate life for a certain number of years and then they accumulate that kind of corpus, build that regularity of income through that investment, and then plunge into business is a different scenario altogether. Now, if you don't have that corpus and you're plunging into business, then your primary objective is to make the business work. And at that time, if I was to land up in somebody's office and tell them, look, don't worry about your business, save for something 20 years from now.
You're not going to be thinking about that. And also, I would think that if you are setting up your business, the biggest investment that you can make is in that business.
Exactly. And the kind of returns that a business gives, probably an investment will not give. So if your business is successful, I mean, your retirement is taken care of in that context. So setting up a business has got a different,
connotation. So, but the bottom line that I'm taking from this conversation, that it's not terribly difficult. Of course, there are challenges, especially in the early days. But the other advantage is to push the envelope just a little bit more. In a salaried job, you only get a certain amount of salary. Whereas I would think that with I've never done it, but I would think that as a freelancer, you can maybe take one more gig and push the envelope a little bit more. So maybe you earn a little bit more in those early
Absolutely.
years.
So that's as popularly said. I mean, in a job, you know exactly what you will gain, what you will earn the maximum, right? That's the most you can do, that's the most you learn. In a business or a freelancing, that's the minimum amount that you can earn,
and the ceiling is endless.
The top is you can just go as much as you can. So, and as you rightly said, it's not terribly difficult. It's just about whether you're able to manage your. Rather you spread your legs as much as you have. As much as you can tolerate. I mean, as बोलते ना चादर जितनी बड़ी उतनी पैर.
Exactly.
So the point is, you can survive for sure. It's just that you need to be within your means. And you need to plan. Okay, you just need to be clear in what you're doing. So as I said, we've been discussing what should they plan for. Is that you make a list of your fixed expenses, provide for them, then you're free to do what you want to do, right?
Absolutely.
So those fixed expenses need to be provided for. And if you've done that well, then I think then you're a free bird to do whatever you want, and then you're not worried about your expenses.
And that's exactly what I wanted to have communicated. Harsh, thanks so much for joining us on Big Decisions. Viewers, listeners, it's been an absolute pleasure bringing you this episode. Do write to us if you've got any specific questions, and we'll try and address them in future episodes. Do stay tuned. This is NDTV Profit.